Welcome back to Rising Talk Podcast. Today, we are analyzing the current market outlook for Cipher mining and really asking that critical question, is this stock a good time to buy right now? We've pulled together some fascinating sources that seem to paint two really different pictures about this Bitcoin miner. Before we get into the breakdown, please do hit subscribe and like this analysis if you find it helpful. And hey, if there's a specific company you want us to look into down the road, definitely drop that name in the comments below. We do read those.
That's right. It's a really stark contrast when you look at Cipher. The raw data is, well, it's conflicting. On one side, you've got, high operational growth, big analyst upgrades, all that narrative hype that frankly pushed the stock to a 52-week high recently. But then you dig a little deeper and you see some pretty foundational financial risks and maybe more importantly, sustained coordinated selling by the company's own insiders. So our goal here is to try and synthesize these really conflicting viewpoints so you can get a clearer picture. Does the operational success actually outweigh what looks like a lack of fundamental conviction?
Okay, let's start where the market clearly found its enthusiasm, the operations and the capacity growth. Because the story over the last 3 months, we're talking July, August, September 2025, it is genuinely impressive on that front. They've been delivering outperformance, and that seems to have led directly to the stock hitting those recent highs you mentioned.
Exactly. I mean, they seem to be executing their roadmap almost flawlessly. The big win recently was getting commercial mining started at their new Black Pearl data center. That's Phase I. That facility, boom, instantly added 150 megawatts of capacity.
Wow, 150 megawatts.
Yeah, it's significant. And when you factor that in, their total self-mining hash rate jumped up to 16.8 exahashes per second. That's a huge number in this space. And they already have a pretty clear roadmap laid out to push that even further, aiming for 23.1 EHs.
Right, and capacity isn't just, a number on a page. It has to translate into actual production, right? Bitcoin mined.
Absolutely. And it did. The company mined 241 Bitcoin in August and 214 Bitcoin back in July 2025. So that kind of consistency, that's exactly what the market wants to see from a miner.
Definitely. But I have to ask, was it just the Bitcoin they mined that drove that frenzy we saw? Or was there more to it?
Good question. No, it wasn't just the BTC production. I mean, that production strength definitely set the foundation. But the excitement really peaked in September when the stock hit that 52-week high of $12.84. And that seemed to be largely driven by two things: analyst upgrades piling in and pure speculation.
Ah, the upgrades. Tell me about those.
Yeah, analyst coverage just sort of exploded. You had Compass Point initiating coverage with a strong buy rating, and then both Cantor Fitzgerald and Macquarie raised their price targets pretty significantly.
And why? What was the reasoning?
Mostly citing the perceived growth potential, looking at that capacity expansion.
Okay, and the speculation part you mentioned, I bet I know where this is going. It has to be AI, right? That's the magic word everywhere now?
Precisely. You got it. If we connect this to the bigger picture, this sort of speculative catalyst, the buzz, is all around these AI hosting initiatives. The sources we looked at mention unconfirmed rumors, stress unconfirmed, that Cipher is in late-stage talks, supposedly with a major AI hardware provider, about hosting dedicated compute clusters at that new Black Pearl site. Now, that narrative, if true, is a potential game changer because it lets investors frame Cipher not just as, a volatile Bitcoin miner.
Right, which everyone knows is risky.
Exactly. But potentially as a high-growth infrastructure play for AI, and that's a much sexier story right now.
Okay, yeah, that's a perfect setup for a huge speculative run, you're right.
Yeah.
But hang on. Before we get too carried away with that $12 peak,
Right.
We absolutely have to look behind the curtain. The financials, which actually, despite a pretty remarkable turnaround, they do provide some necessary context for the risks involved here.
We must. Yeah, the 2024 full-year results they were phenomenal. No question about it. Total revenue hit $147.7 million. That's a massive leap from just $37.4 million in 2023.
Huge jump.
And they didn't just grow the top line, they actually became profitable. Net income for 2024 was $19.2 million. Remember, they had a $25.7 million net loss in 2023. So that's a big swing.
That swing is enormous. But what's maybe the strongest sign of fundamental improvement, beyond just revenue and net income?
For me, it's the margin strength. That is the key indicator of efficiency, of operational maturity. Their gross margin for 2024 was a really robust 51%.
51%, wow.
Yeah, think about that. They were only at 17% gross margin in 2023. Getting to 51% shows they've managed to contain their core costs, electricity, cooling, hosting extremely well, and that fundamentally changes the investment case. Provided, of course, Bitcoin's price stays somewhat stable.
Stability.
Yeah.
That's the key word there, isn't it? Because that 51% margin sounds fantastic, but what about the balance sheet? What's the liquidity situation? Because efficiency doesn't help much if the company's drowning in debt when the crypto market inevitably takes a nosedive.
That raises a really important point. They finished 2024 with a decent amount of cash, $54.3 million. Okay, however, they are carrying total debt of $130 million.
Okay, so more debts in cash.
Significantly more. And it's primarily equipment financings and credit facilities. Their current ratio is moderate, maybe it's 2.1, which indicates they have about twice the current assets as short-term liabilities. It's okay, but maybe not stellar for a business this capital-intensive and volatile.
Right.
And look, the biggest risk, if we just zoom out for a second, is the inherent nature of this company, of this whole sector. Even with a fantastic 51% margin, their performance is structurally extremely sensitive to Bitcoin's price trajectory, full stop. If Bitcoin drops dramatically, suddenly that $130 million in debt feels a lot heavier, right?
Yeah.
And those equipment financing payments become a major strain.
Okay, wait a minute. Let's recap. We've got a great operational story, fantastic capacity growth, a pivot to profitability, strong margins. If everything is looking this bullish on the surface, why are the sources also pointing to this really critical bearish signal, sustained coordinated insider selling? Why would the people who supposedly know the company best be, well, running for the exits?
That is the million-dollar question, isn't it? It's the ultimate cognitive dissonance in this whole analysis. And look, this wasn't just minor isolated activity. We saw sustained insider sales happening in August and September 2025, right as that new capacity was coming online, right as the analysts were shouting, buy.
Okay, can you give us some specifics, like who was selling and how much were we talking about?
Absolutely. We're talking major holders, V3 Holding, various Bitfury entities, Valerius Vavilovs, also a director, Carrie M. Grossman. They sold a combined total of 2.4 million shares.
2.4 million shares.
Yeah. And what's really crucial to note here is the price range they sold at. These sales happened at prices between $5.90 and $8.70 per share.
Okay, so nowhere near that $12 peak.
Not even close. This selling was heavy, it looked coordinated, and it was persistent over that period. Look, when major insiders persistently unload millions of shares, it's not always just about needing cash for a new boat, you know.
Right.
It's often seen by the market as a signal, maybe a lack of conviction in the stock's short to medium-term performance, regardless of the positive operational headlines. And it creates this phenomenon the market calls overhang.
Overhang, that's a great term. But for listeners maybe less familiar, what does that actually mean for the stock price itself?
Yeah, think of overhang as like a big cloud of potential supply just hanging over the stock waiting to hit the market. It means that whenever the stock price tries to make a run-up, say, it tries to get past that $8.70 level where they were selling, well, those remaining insider shares act like a heavyweight ready to be potentially dumped by others to realize profits or just get out. So this constant potential supply pressure, it kind of suppresses the natural upward movement of the stock. It requires significantly more buying volume just to tread water, let alone move higher. It really highlights the difference between, operational success metrics and maybe a lack of fundamental value conviction from the inside.
So we have this massive gulf then between the operational hype and AI rumors that pushed the price briefly to $12.84 and the hard, cold conviction, or lack thereof, shown by the insiders selling heavily below $8.70. Okay, let's look at the immediate technical trading context for the stock then. Does that shed any more light?
Yeah, the immediate trading context really reinforces this tension we're talking about. The sustained trading range over August and September was pretty tightly compressed, mostly between $6.80 on the low end and $8.70 on the high end.
Right, so that $8.70 level keeps popping up. Why is that range so critical, and how does it connect back to that excitement, that $12 high?
Well, that $12.84 high looks increasingly like a speculative, maybe short-lived spike, probably driven by those analyst target upgrades and the AI rumors getting ahead of themselves. The $8.70 resistance level, which is significantly where that insider selling was concentrated, seems to show the more realistic ceiling the stock has really struggled to break through consistently. On the downside, we do see visible short-term technical support holding near the $7 mark.
And what about momentum? Was there buying pressure trying to push it up?
Well, the technical indicators do show an uptrend overall since mid-August. The stock is trading above both its 50-day and 200-day moving averages, which is generally seen as positive. But, and this is important, momentum indicators, specifically the RSI, the Relative Strength Index, were frequently hitting overbought conditions during September. That suggests that the buyers who are left were maybe getting exhausted, trying to push the price up against that sustained supply, potentially from insiders or others following their lead.
This tension is really the core of the dilemma for anyone looking at this stock, isn't it? Okay. Looking ahead then, maybe the next few months, what are the key events or signals that investors who either own this or are thinking about it absolutely most monitor?
Right. The immediate catalyst is definitely the Q3 2025 earnings report. That's expected around October 7th, 2025. Investor scrutiny there is going to be intense. They'll need to see, first, a successful integration of that new Black Pearl capacity into the numbers. And second, verification that the company is maintaining those really phenomenal cost efficiencies and margins we talked about, especially given any fluctuations in the Bitcoin price during Q3.
Makes sense. And beyond the company's own numbers, you mentioned institutional signals earlier. Are there dates for those?
Absolutely. Institutional signals are critical for gauging broader market conviction. You've got a major ETF rebalancing event coming up on October 15th. That could impact demand, depending on index inclusion. And then the big one is the institutional holdings update, the 13F filings, which are due around December 2nd. Those filings will reveal whether the really large institutional players, the pension funds, the big hedge funds, are actively accumulating shares, or if they too are maybe retreating alongside the company's founders and insiders.
That's a really good proxy for long-term belief or lack thereof.
Exactly. And just long-term, keep an eye on their stated target. Hitting that 12 EH's operational hash rate by late 2025, hitting or missing that is fundamental, regardless of any AI hype.
Okay, let's try and synthesize this then. Put it all together for a final investment thesis based on the sources. We have this narrative of, frankly, outstanding operational growth, lots of analyst enthusiasm, a massive financial turnaround fueled by strong margins.
Yeah.
That's one side. But that's fundamentally countered by the extreme volatility of the whole crypto sector, the company's heavy debt load, and perhaps most concerningly, that persistent, coordinated lack of conviction shown by major insiders selling millions of shares at relatively low prices.
Yeah, that sums it up well. The consensus view derived from our analysis sources is definitely cautious. One comprehensive analysis we looked at actually gave the stock an overall rating of just 4 out of 10.
Wow, only 400 in Sen despite the operational wins.
Right. The conclusion basically was that while Cipher mining has certainly achieved improved scale and efficiency, that success is largely overshadowed by its structural exposure to Bitcoin's, let's face it, unpredictable price movements. And critically, by that heavy share overhang created by the insider selling, it puts a cap on potential upside, or at least makes it much harder to achieve.
So who is this stock actually for right now then, based on that?
It seems extremely specialized at this point. The investment thesis really suggests the stock is best suited for, maybe, the highly risk-tolerant investor, someone who is already a dedicated crypto enthusiast, potentially with significant capital they can afford to risk. If you're comfortable monitoring Bitcoin price action almost hourly, and if you strongly believe those Black Pearl AI hosting rumors are not just rumors but are actually going to materialize soon, then maybe, just maybe, you might accept the considerable risk involved.
But for others?
But for more risk-averse investors, people seeking more predictable returns, the current risk-reward profile looks highly unattractive according to these analyses. The impressive operational performance seems to be effectively neutralized, at least for now, by that perceived lack of fundamental conviction coming from the company's highest levels. So maybe here's the final thought to leave people with. If you look back at everything we've discussed, the fact that pure market speculation, fueled by AI rumors and analyst optimism, could briefly push this stock all the way to $12.84. While at the same time, key insiders, the people who know the business best, were actively selling millions of their shares for under $8.70. What does that disparity really tell you about the difference between fleeting market exuberance and genuine fundamental long-term conviction from company leadership? So the question you really need to chew on, I think, before you even consider hitting the buy button on this one.
That is a powerful point to end on. Really highlights the core conflict here. Well, thank you for walking us through that complex picture. And thank you, our listeners, for joining us for this analysis. Just a reminder, as always, the source material in our discussion today are purely for research and educational purposes. This is not investment advice. Please do your own due diligence. We appreciate you tuning in, and we'll catch you on the next one.